Hello, welcome to this webinar today presented by ESS BIZTOOLS, Systems Assist Success. I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. If you're watching this webinar in your own time, at a time more convenient to you, and you have any questions, please send me an email, peter@essbiztools.com.au. Bookkeepers and accountants, warning given by the former tax commissioner. This was a very important speech that Chris Jordan, the then taxation commissioner, made at Xerocon 2022. Because he was talking to bookkeepers and accountants who were servicing very small SMEs, undertaking wage earner and salary earner tax return preparation, when he said as follows: you must understand that if your business model is high volume, low margin, simple tax returns, your business will not be viable in 3 to 5 years' time. He then added, focus on becoming a brilliant and trusted advisor. In the Crunch 2024 annual accounting firm benchmark report, produced by benchmarking.com.au, with insights from co-authors Mark Holton and David Smith from Smith Inc., the following comments were made. The number of bookkeepers in Australia is set to fall 5.6% over the next 5 years. That's according to Australian Government Labour Market Insights. This reflects the continued decline for bookkeeping services from business owners. However, there's a big but. This offers opportunities for reskilling these positions into more strategic and advisory roles. Opportunities for reskilling these positions into more strategic and advisory roles. And that's really the theme of what we're talking to you about today. The next key issue that affects bookkeepers and accountants servicing the smaller end of the SME market is the widespread challenges with debtors and suppliers. MYOB CEO Paul Robson commented in the Financial Review a year ago that an NYOB survey of 1,000 business owners had revealed there were widespread challenges with debtors management. People, according to the report, were under the impression that if anyone walked into their business and asked for credit, they had to give it to them. Well, we all know that's not right. There also seemed to be an assumption that every debtor would pay their bills within 30 days of the tax invoice. Unfortunately, that's not correct either for the vast majority of Australian SMEs who have debtors' days outstanding significantly in excess of 30 days. And there seemed to be no appreciation of the need for a debtors management system to be implemented, or the calculation of the debtors' days outstanding, which is a crucial business metric within every business that's offering credit. The next item that MYOB commented on was supplier payment terms. Apparently, a significant number of the 1,000 firms surveyed had started business or had switched suppliers and had made prior contact with the supplier to really confirm what the payment arrangements were going to be. I gather those businesses went ahead and ordered from their preferred suppliers and then got a rude shock because many of those suppliers demanded cash with order or cash on delivery, or perhaps payment within 7 days of delivery. Those businesses apparently had, in their cash flow forecast for the start of a business, had assumed, bad word assumed, had assumed that every supplier would give them 30 days credit. And to their horror, they discovered that a significant number of them wouldn't, especially for a brand new account. Now, there's a lot of problems in the SME community, and they were there a year ago when the MYOB team concluded their research, and Paul Robson published his article in the Financial Review. That situation is undoubtedly deteriorated further today. It's very tough conditions, and you don't need me to tell you that. So this is a big issue for people starting businesses or switching for suppliers whilst they're already operating a business, and assuming that they're automatically going to be greeted by the supplier. They probably are by the sales team, but the people within the office in charge of granting credit are, in some cases, are inclined to say, no, we'll put them on cash on order or cash on delivery, and we'll see how they go. See if they're making their payments, see if they cause us any headaches. And this might go on for some months, could be 6 months or even longer, before they'll grant them what are considered to be normal credit terms, payment in 30 days. Now, what all this did to those firms that MYOB were commenting on, it meant that about 6 months after they started business, or 6 months after significant changes were made in the already operating business, they ran into cash flow problems. And the biggest cash flow problem they had was with the Australian Taxation Office, who, as we know, during the COVID period were very lenient for SMEs, but they're not anymore. In fact, I read a report the other day that indicated that something like $35 billion is owed by SMEs to the tax office. So that's probably understandable why they're a wee bit tough at present. So those businesses were running into problems primarily out of these three main issues: not understanding debtors, assuming that everyone would pay within 30 days. And another comment that I would make on that assumption about everyone paying in 30 days, Australia received a very dubious international award about 4 years ago, which was that Australia had the longest debtors' days outstanding in the world. At the time, the Australian Small Business Ombudsman, Kate Carnell, described it as a national disgrace that we had received this award. The actual calculated debtors' days outstanding on was calculated at 58 days at that time. Now, since then, the federal government's made some moves to put added responsibility, or pressure is probably the better word, on the big end of town, companies with turnovers over $100 million. And there's now a legislation in place which imposes a name and shame the big end of town companies that don't make their payments on time. Only time will tell whether that's a successful deterrent to big companies. But we need to make sure, as advisors to our clients, that they understand these conditions that apply in the marketplace. I've made the comment in a blog article that I produced a couple of weeks ago that I hope that the businesses that MYOB are referring to never received bookkeeping or accountancy advice before they started their businesses, but they may have. And we need to revisit our systems as to how this advice is given to new people in business. I know some of these people, and I've been dealing with small medium enterprise operators for a long time will tell you that they've had experience. They may have been an accountant in a high position in a larger company, but the reality of coming back into the small business world is different, and companies will put harsh conditions, well, what they consider harsh conditions on new customers, and they should be aware of that so they get their forecasting prepared. I think they should all have a business plan, budgets, cash flow forecasts, and a complete model already worked out, and it should be vetted by their bookkeeper or accountant to make sure that these significant areas that can disrupt the planning are thought about before they've made the commitment to actually start business on their own. A key component of offering services as a brilliant and trusted advisor is that those services are based on systems that contribute to the business success of the SME. Within ESS BIZTOOLS, we've developed a whole range of systems. At least 50, there's probably more. I'm going to share with you what I consider is the 12 key systems to get the business operating on a firm foundation. And that, I think, is our role as accountants and bookkeepers, to try to help our SME clients to get started and remain on firm foundations in their business activities. So the first one is the knowledge that you obtain on that client, the business evaluation to understand the business. 1 inch wide, but a mile deep is very important. The knowledge that you may have currently as the bookkeeper or accountant for a SME is primarily driven because of taxation considerations in most cases, or it may be the preparation of the books of original entry. But how much do you really know about your client's business activities? Have you reviewed the risk strategies? Have you reviewed who's got authority to commit money payments? What's the internal control system? None of those issues are considered when a tax return's lodged. They're not part of the tax officer's requirements for you to go through and tick that you've checked all these things. But if you are going to be the key financial advisor for an SME, I submit to you that you need to have undertaken that detailed review. In some cases, it will take an hour, others it might take a day to go through and look at that process. The next very important activity is the business plan. Business plans are vital for businesses. They're like maps for tourists. If you don't know where you're going, how are you going to know when you get there? But more importantly, how do you know on the journey whether you are in the position you were planning to be in running a business? And you need to make sure your clients understand this. I think business plans should be prepared for a 3-year period, but analysed every year with the leadership team. And the business plan should not be prepared in isolation by the bookkeeper or the accountant. It needs to be a joint team effort with the leadership team. Sure, you're going to write the business plan up and coordinate the whole process, but you need the buy-in of the key people in the business, the management team, the leadership team, the owner, whoever you call those people. You need their buy-in and you need their commitment, because they're the ones that are going to have to deliver a business operation that enables the business plan to be achieved. System number 3 is a rhythm of meetings. Very important that you consider the concept of what are the daily meetings required. They might only be short and sharp, 5 minutes, 6 minutes. Basically, did anything go wrong yesterday that's likely to cause us embarrassment or problems, or we've really got to put a team in to explore what went wrong? And is everyone fit and well? That's basically the daily meeting. Now, that could be the executive team, the leadership team, but also in little team units, the working units around the business. Weekly meeting is very important because we have a concept of the weekly performance and profitability report, which I'll talk about shortly. And that would be the review of that and anything else. It might take a little bit longer, especially for the leadership team. It might be planning work to be done in your own offices, of course, very important. And your clients have got those same considerations. So what we're suggesting is you help them implement this if they haven't already got it, and then monitor it. And then the monthly report. Now, the monthly report's very important. What's going to happen on a monthly basis? So those meetings to consider the actual performance, not only the profit and loss accounts and the balance sheet, but the key performance indicators and the business metrics, and to review the business plan. What was supposed to get done in this quarter? Are we underway? Have we already completed it? Because the business plan should not be a document that's just prepared and thrown in a filing cabinet somewhere. Predictive accounting reports. This is the financial interpretation of the business plan. It's budgets for all operations. I don't like the concept of having a consolidated budget. If you've got 5 units in your client's business, they've got 3 shops and they've got a factory of some sort, and they've got a warehouse operation, 5 separate profit and loss accounts, so that you can really identify where the results are coming from, where the problems are. If you put it all together, identifying the problems can be difficult. The key drivers of major accounts. When some people prepare budgets and cash flow forecast, a lot of this information just gets put into the body of the budgets. It gets lost, but we really want to be able to track the inventory investment for raw materials. If your client's buying in raw materials from somewhere, what's the investment going to be? Completed stock, what's that going to be? The planning for production is also one of the key drivers. The debtors, very important. And what's the debtors' days outstanding? What's the creditors' position? And what's the creditors' outstanding? So you've got these key sub-accounts that all link back into the whole budget and cash flow and projected balance sheet process. Then we go to the cash flow forecast, of course. And the key item you're looking for here, is there going to be any problem areas that you can see on the horizon? It might be in 6 months' time, 8 months' time. It could be built up because of inventory levels that are required. It could be because your client's importing raw materials from somewhere around the world, and there's problems around the world as we know at present, and that's causing delays in shipping. And your client may be faced with, gee, the investment in stock's going to increase, but there's no doubt that supplier in some overseas country, they wanted to get paid before the goods left their shore. So your client's outlaid the money, the inventory levels have gone up. Someone's got to pay for that. So is their funds going to be available, or is there going to be shortfalls? And then what can you do about it? Go to the bank and try and raise some money. Has the company or business got security they can offer? Or look at whether we could use one of the great opportunities that small businesses now have as they're a company to raise capital direct from the public. Yes, this is happening, and there's a lot of money getting raised. It's a lot more obligations on the company directors, of course, and they need your input because they need to have like an operating system as if they were a larger organization and had a full-time office manager, bookkeeper, office manager, and accountant working every day. You can substitute that arrangement. And then the projected balance sheets. It's a wonderful document because you can sit down at the end of it and say to your client, this is what the financial position of your business will be in 3 years' time. Or whatever, 5 years' time if you're doing a real long-term budget. So this is the financial interpretation of the business plan. Business plan first, and then the budgets and cash flow forecasts. And one of the key documents that we believe that every business should adopt is the concept that we're having a 52-week business enhancement system. Businesses do operate 52 weeks of the year. Now, some have seasonal shutdowns. But my experience of seasonal shutdowns is there's a lot of work gets done in that period and a lot of money gets spent because major new construction activities take place or significant repairs and maintenance or cleaning or just changing things around a bit. So the business still needs to have those controls. So the 52-week business enhancement system is built on the concept that there are some daily activities, and it's basically what happened yesterday, what was the sales, what was the average sale, what was the bank balance, what's the debtors amount owing, what key payments are going to get made this week, goes to the leadership team so that they are informed. So they understand why someone in the office is saying, gee, can you go and ring Mr. X, your major customer, because he owes us $55,000 and he hasn't paid it. It's normally a follow-up visit or a phone call that a senior executive should be making. Weekly activities. We're going to look at the weekly performance report in a moment, but it's vital for business. And then the monthly activities. So that's what the 52-week system's about. There's daily, weekly, monthly activities. They're repeated the next month. Because what happens for a lot of SMEs is that they only receive accounting input once or twice a year when it's basically been undertaken as part of the information flow for the preparation of an annual set of accounts and the tax return. Your business clients need a lot more information than one or two contacts a year. They're running a business. They're employing people. They're paying wages. A lot of them are flying around in the dark because they don't know who can give them this advice. You can. What we've got to be as a profession of bookkeepers and accountants is more upfront with the clients to tell them that they need these services and what they are going to cost, and they need to factor it in. Otherwise, they end up with one of these horrible statistics of business failures, and we don't want that. So in the monthly activities, we're going to look at comparisons of actual P&L accounts for each operation with the budgets and look at the variances. So you can say, what could have happened? And we look at the analysis of key performance indicators. I just want to come back to the weekly performance report because I omitted to make a comment there. My apologies. The key objective of this whole concept of 52 weeks is to make sure that each week a profit and loss account's prepared. Now, this is quite common in the big end of town. I spent a decade in the meat industry with one of Australia's major meat companies. I was the chief financial officer and company secretary. And what I discovered when I went there is the big end of town and all the meat industry did the same thing. And I've subsequently found that Woolworths and Coles and IGA and hundreds of other major chains all have weekly performance reports for every activity. It's the way they control it. One of the key persons involved in all that is the accountant or senior office manager in locations. And they get the reports out for week endings on a Saturday or Sunday, normally on Monday or Tuesday, so that their local area manager can sit down with the person in charge of that particular activity and review the result. There may have been an expectation that gross profit percentage would be 38%. And we've only got a report here which shows 22%. There is an immediate investigation. What went wrong? What caused this to occur? Now, it could have been any one of a number of reasons. It could have been that a great new purchase of product that we hope to specialise in that particular week, that which would have driven up a lot more foot traffic into the store. That didn't turn up because of floods or something else. And okay, that we can calculate what difference that may have made in the result, and that may be the reason for the variation. Or it could have been that someone's made a clerical error, that the stock take wasn't conducted, or they missed out a whole freezer of product when they did the stock take. It could be reasons. There could have also been fraud, or there could have been a major misinterpretation of how the business operates, that if it's not fixed, could continue. week after week after week. And at the end of the year, then, at the end of the financial year, and bear in mind, the end of the financial year, people really don't know their results if they're just getting a tax return process done. It will be months later, might be 4 or 5 months later. They go to their accountant, and their accountant says, geez, you didn't perform as well this year, Jim or Mary. Based on previous years, you've always averaged around 36 to 39% gross profit percentage. You're down at 23% for this year. So that's affected your overall result. Didn't you see something was going on? Oh, yeah, we had a bit of a feeling something was going on, because the problem may have continued week after week. By preparing the weekly performance report, you've identified this problem and hopefully fixed it. That's the real purpose of the weekly performance reports. So I'll just continue on now. And then we've got systems 10 to 12 really cover the reports that are then prepared on the financial performance. Hopefully you're performing this role as being a virtual CFO or whatever you want to call it. But you should then be writing a financial report on what happened in the business for submission initially to the leadership team. And if your client's got a board of advice, and as they grow, I would recommend you be talking to your clients about a board of advice. But we cover that in ESS BIZTOOLS in our advanced package. And then the board of directors. If the business is a company, I think you should be encouraging your clients to get at least 1 or 2 other people on their board. If you can sit down and have a meeting each month and analyze their performance. So they're the 12 systems of that we consider. Today, we also wanted to bring to your attention the advisory intro package. And I'm going to take you onto our website in a moment, and we can just have a look at that. But some of the key factors within the advisory intro package, just to give you a bit of forewarning or for advice. We have the business advisory firms training. This is very essential. I know that most bookkeepers and most accounting, and I was the senior partner in an accounting firm for so many years, and this is where we developed this whole concept of what we now call ESS BIZTOOLS. But I realized that accountants and bookkeepers who are sitting there used to just preparing the information that basically forms part of a journey that takes it into a tax return don't really have a lot of interaction with the clients. Some do, of course. So we wanted to be able to give, within the system, some briefing material to train your team in what the variances are within offering advisory services. You have 320 papers on about 50 different subject headings that you are able to use. In total, there's nearly 600, but 320 have been allocated to the advisory intro package. These are papers. Some are only 2 or 3 pages. Others are 20, 30 pages, depending what the subject is. As a subscriber, you can badge and send to your clients. You can give them to the clients, or you can charge them for them if you like, but you don't have to pay ESS any more money. We then go into beginning in business. This is a complete series that you could work through with a new client. Send them the articles, get them to come back in, run a training session with them to get them properly set up. Business Plus is a monthly newsletter we write, and I'm going to show you Business Plus in a moment. The whole idea is it's 4 A4 pages. You badge it, you send it to your clients. We suggest you read it before you send it out and write down which articles you think individual clients might be interested in. And then 4 or 5 days later, ring them and say, hi, Mary, did you read that article we sent you about the Export Market Development Grant? Last time you were here, you told me you were thinking about going into exporting. Well, there's a special government grant that you can apply. You could get up to $770,000 over an 8-year period out of that grant if you kept on growing and growing with it. And then you could say, well, let's have a cup of tea or a cup of coffee and we'll have a discussion. So go out and sit down with a client and discuss it. And the tradies charge out rate calculator, I'm going to show you that so that we can just have a look. So just bear with me a moment, thanks. And I will go to our website. So on the screen now, you should have our members homepage. This is in the members area of the ESS BizTools. We have 4 packages within ESS, overall packages. We have the advisory intro, which is where we start. Everything in advisory intro then rolls into the starter package, and obviously there's more added there. Then it all rolls into the advanced package, and there's more there. And then we roll into the financial forecasting package. So what we're looking at here is the advisory intro package. So I'm just going to bring up, so on our screen now in these little boxes, we've got the components of the advisory intro package. Now we're always adding to these product packages, and there's a few more currently being finalised to go into each of these package overall summaries. But I'll give you a quick overview of what we have here so that you can understand. I mentioned the Business Plus newsletter. So what I'm doing now is what you would do as a subscriber. You can just click on to what you want to look at. You could obviously click on there and listen to me giving you an overview of the whole basis of the Business Plus newsletter, but we won't do that now. It takes a bit of time. You can listen to that if you wish. We've produced 249 editions of Business Plus. It's been getting produced for about 18 years, and it's a communication tool. So we'll bring it up now. So we have a list here of what's available. There's the Business Plus newsletter, and then there's other items, forms and papers and some other papers. These are the reference library material, because within the paper itself, the article itself, the Business Plus article, we've mentioned some of the subject matters that are covered in these other forms and papers, and we thought you might like a bit more information, so that if a client rings you, you can really be the expert in discussing with the client what the process is. So there's the Business Plus newsletter. This is the February 2025 newsletter. So we have an index. So we're going to look at the key drivers. I was talking about the key drivers just a while ago, wasn't I? And we're looking at unlocking growth, strategic financial planning, compliance, streamlining, the whole concept of financial commercial management, accounting advisory services, how to decide if you need more help, the bottom line, business planning is important. So we try to write a series of articles. We try to split them up and have something for people at various stages of their SME journey, whether they're starting up or thinking about it, or they've been in business for 6 months. We try to cover. So we use the term key drivers, and I'm saying they're the engine room of the predictive accounting reports, and they are indeed. So there's a list of what some of the items. I listed some of those as I was talking to you before. There is more there that you could look at and say, okay, that's what we're looking at. So this is the newsletter that's prepared, and what I should have shown you, sorry, my mistake. In here, you would have badged it. On our instructions that go out to our subscribers, they know to badge it with your firm name there. So it doesn't say ESS BizTools at all. So that your client thinks that you've written this. And that's one of the real reasons why we're suggesting you make sure you read it before you send it out. So if a client rings you and starts talking about it and said, in your newsletter, don't say, oh, no, we didn't write that, because it's going out on the basis that you've written it. And this has been successfully operating under this model. We've been going for 18 years, but I think the model was firmly set up about 15 years ago, and that's what we've continued to operate. Each month we produce a series of different articles. So then we look at interested in unlocking growth, because this newsletter is a sales tool for you, to your advisors, to your clients, sorry, and your prospects. So are they interested in unlocking growth? Is a small business owner wanting to grow? Is he there wearing all the hats, salesperson, marketer, manager? And yes, he's probably the accountant within the organisation because they haven't got one. And they might have only been using you for the tax return work. We are trying to get the message across that bookkeepers and accountants can assist them in a lot more work. And in lots of ways, as a profession, we've got to sell ourselves better to our clients to get them to accept this. We mentioned strategic financial planning because this is important for businesses to acknowledge and to make sure they're doing. Compliance and reporting, streamlining processes. After they read these newsletters, some of the clients get on the phone to their accountants because we get follow up from our subscribers, and they say, yeah, someone looked at it for about 6 months and thought about it, been reading the ongoing newsletters, and then rang and said, look, I want you to come in, do a business plan, and do all this streamlining you've been talking about. And again, the client's assuming that that was someone in that their accountancy firm or bookkeeping firm that was producing these articles. And then we talk about this financial, commercial, management, accounting, advisory services. That's what we believe we're writing at ESS BIZTOOLS. We're not giving you advice on taxation other than in some very particular areas like the research and development, tax rebate. That is part of the Tax Act, which a lot of people express surprise at, but it is. But we have an overview document on that, which I'm going to show you a part of in a moment. The bottom line. So then we move into business planning. We talked about business planning before. I think it's very essential. And what I did was prepared a summary of the content heading of a business plan that I prepared a few years ago for a construction company. And I put this in because one of our subscribers said to us, can you give our readers, our clients, a bit better idea of what you might cover in a business plan? Now, we can't produce one of my other clients' business plans that I prepare out of my consulting company. But what I have done is prepared the list of their contents of their business plan. Now, this was a company with a turnover up a bit, $35–40 million, and they'd been a construction company for a long time. So we had executive summary, current financial position, strengths, weaknesses, opportunities, history, which is important to have because this was going to go to their bank. And whenever I write these business plans, I'm also looking that they may need to raise capital from other people. So there's a whole range of activities there that you might care to look at. And then we had some addendums. At the end, we have attention accountants. Now, we're suggesting before you send this document to your client that you remove that. You can fill up that space with some of the news from your firm if you like. You may have your own seminar coming up, or you may have one of your clients may have won the business person of the year in your location. The reason we've got it there is to alert you and to give, and if you click on that when it's just in red, it will immediately take you to the paper or the form that we're referring to, so that you can look at the overall document, so that you're better informed as if one of your clients asks you a particular question about it. So that's the overview of the Business Plus. We are running a specific webinar on the advisory intro package in about 4 weeks' time. We'll send you details of that. So we are aware of the difficulties that are going on in the marketplace. It's difficult for businesses to survive, but they need additional assistance, and we believe that you can supply it. For those reasons, we've introduced a 12-month special package offer for you to become subscribers to the advisory intro package, which has been specifically developed to assist bookkeepers and accountants to offer a diversified range of advisory services. So this package will cost you $499, less than $10 a week, obviously, including GST for the 12 months access to everything, including training, which is summarised in our documentation. And this is a 50% discount. So if you're interested, please go to our website, www.essbiztools.com.au, and click on packages and pricing, and then click on advisory intro package, and then click on subscribe now. And then within 24 hours, we'll be back onto you, and we will send you the initial material so you can start exploring the advisory intro package. We've scheduled our next intro subscribers training session on Wednesday, the 5th of March at 10:30 a.m. AEST, and you'll get an invite, if you're a subscriber, of course, to participate. You can have your whole team turn up for that. It will take 45 minutes, and it is part of our ongoing monthly training program that we offer for each category of subscribers. So we've got 4 subscriber packages. We run 10 training sessions a year for each of them. So there's 40 in total. Incidentally, you can go to any of the training sessions if you wish. If you want to have a look at what the advanced package material is all about, you can just register to go to one of their training sessions at no extra cost. So that's the overview of the ESS BizTools and it's part of this promotion that we're having at present. If you've got any questions, you can send me an email, peter@essbiztools.com.au, or telephone me on 074724 1118. Thank you for being with us, and I do look forward to hearing from you. Have a great day. Goodbye. Thank you very much. And I hope if you have any questions, you will contact me. Thank you. Goodbye.